Mickey Dickey here, and I want to give you an update on CPI. Got a couple of videos to go over, so let's get straight to it.
By at the CME in Chicago, Rick.
Yes, and it's dropping as if somebody thought they had the number, but they're wrong because it's hotter than expected. CPI for the month of September headline expected up 0.3. And many are saying if you extrapolate this number, we're in the twos. Well, it's up 0.4%, up 0.4%. Still don't see a revision to up 0.6 in the rearview mirror because, of course, up 0.6 was the highest since June of 22. Strip out the all-important food and energy, which is what I was referring to with that extrapolation. It hovers at up 0.3%. That is the second month in a row it's been there. We haven't had a revision yet. The prior 2 months were the lowest since February 21. We had back-to-back up 0.2, but it's now up 0.3 and year-over-year 3.7. Year-over-year headline, 1/10 hotter than expected, exactly as in the rearview mirror. So that's 3.7 back-to-back. The recent low water mark there was 3%. That was in June. That was the lowest since March of 21. Now, this is my favorite year-over-year core, which, by the way, hasn't been below 4% since May of 2021, is now 4.1%, exactly as expected. However, we have made progress. It moves from 4.3 to 4.1.
What he's saying is that the core came in at 3.7, which was at 3.7 last month. So it's not an increase, but it's not an increase mainly because of oil. And we've been talking about this, that oil for the first half of the year was on a downward trajectory because of its comparables from the year before. And that once we got into September, we were going to run into a situation where the year-over-year comparables of gas prices were not going to be deflationary or have the CPI continue to come down. They were going to flatline. So they're not going to be a help, not really going to be a hindrance either. I mean, energy is only 6% of the entire. So if it's up 0.3%, and the whole thing's up 3.7%, it's really not contributing all that much to the problem. But the bigger issue here, and this is the one I want to focus on, and nobody else focuses on it enough, I think, is that the core went from 4.3 to 4.1. And more importantly on the core is that Shelter went down as well. Shelter went down to 7.1%. Now, again, it's just trickling down. It is not coming down as fast as we expect because, honestly, we don't know how we do know, but the calculations for it are just, in my opinion, stupid. Because again, back in March, year over year, home sale prices were actually down, and yet we were up over 9% on the CPI part. So the lag on this is huge. But we do know that part of this is going to continue to come down, and as it continues to come down, it's 40% of the whole. So it will continue. The question is the rest of it make up the difference? And the answer at this moment is no. So this is exactly what we're looking for here. And not only that, but he's going to talk about employment here in a second.
As I said, still haven't been under 4 since May of 2021, but 4.1% on its own is the lowest level since September of 21.
And I'm going to stop it again. I want you to focus on this. It is the lowest since September of 20, okay? And again, this is the core. So when everybody says that inflation is sticky, okay, it's sticky, but do we want things to just drop off the planet and break things? I mean, do we not want the soft landing we're talking about here? And everything is coming down as we're hoping for. Yes, it's taking time. But again, it took 19 months to get there. It's going to take over 19 months to get back down there. It's working its way down. The core of 4.1 is the lowest since September of 21. No one's talking about this.
We're at 4%. Now, let's go to initial jobless claims expected up 210,000. Darn close, 209,000. And last month, revised up 2,000 to 209,000. Back-to-back, 209,000. Let's
Jobless claims, 209,000. Again, it's a really great read. It's about as Goldilocks as you could get. The only thing I could have probably asked for was the 3.6 instead of the 3.7 on the headline. But the rest of this is exactly what we want it to be.
Look at it this way. We haven't been at 250,000 since the first week in August, just to put a face on it. And
once again, haven't been over 250,000 since August. Now, here's my issue with all of this. As most of you know, my opinion on this thing, and we get to listen to these guys because they're finally coming around.
Let's get to the CPI print, though. Jim, the general take is that Shelter, which was more than half the gains, means the Fed may look past this one.
Shelter was more than half the gains. Okay. I can't spell this out any more clear. Shelter will continue to come down. And I know people, they're saying, hey, home prices are up. I get it. And I'm not saying that home prices are coming down. I'm not saying that at all. What I'm saying is they're not going to continue to go up by 10, 15, 20%. They've continued to come down. There's a lag on this because if you look at the year-over-year numbers, they're not even over 5%. And yet on this print, they're at 7.1%. So there's still a lot more room for Shelter to come down, and it was half of the increase. They mention it, but you're not hearing this in the rest of the news. This is the most important part of the whole picture. This is how you get core down to 2% when it's at 4.1, because half of the gain was in Shelter. If you get Shelter down to just what it currently is, and let's say it's 3% instead of 7, now you're down to your 2% numbers. Again, just saying. Now, this gentleman was saying what I was saying yesterday. I want you to listen to this guy because he's got it right.
For longer, and I think that's what the market has got to get its arms around and fully embrace. And from a starting point, I think the bottom line after this number is to solidify the notion of high for longer, not higher for longer, but high for longer. And I think that's.
And again, you've heard me say that. I said it a little differently, not high for longer, but where we currently are for longer, because I don't even think where we're at is high. Again, historically speaking, it isn't high. It's higher than it was. So I don't like the term higher for longer. I like where we're at for longer. And that's what we continue to hear from the Fed speak. And they're going to continue to say that. There's nothing in this report, nothing from yesterday's report, to say anything different. Now, my last video, I'm having a hard time with this one.
Headline inflation came in at 3.7%. In the prior month, headline inflation was at 3.7%. Core inflation is at 4.1%. This is an improvement from.
So again, I look at the headlines and look at the tagline up here. Zero progress made. Okay, that's not true. And yes, you're right. Year over year, it's at 3.7 versus 3.7, but it's not as simple as all of that. You have to break it down. You have to look at what's changing and what's part of this. As we've talked about, with oil being up, it makes the numbers look skewed. So he is talking about the core being down. So let's listen to the rest of what he's saying, because again, he kind of goes off the rails here in a minute.
From 4.3% in August. So as you can see, inflation remains sticky as was expected. So I want to share with you the highlights of the CPI inflation reports, and then we'll talk about what the Federal Reserve is expected to do with interest rates, whether they're going to raise them or not. And of course, this is going to have an impact on the economy and on you and me as well. So let's start with energy. Energy prices year over year are down 0.5%. So that's not good, and that's going in the wrong direction.
I don't quite understand why that's not good. And someone's going to have to explain this to me. Because if energy is still down year over year, why is that a negative thing? Now, he's saying it's going up from the month over month. But again, as I keep telling you, you can't look at these numbers at a 1 month basis. You have to look at them in its entirety. And again, more importantly, looking at it year over year. Because based upon what time of year, different part of energy goes up and down based upon where you're at. I mean, December, January, February, up north, you're going to spend more money on heating. In the south, you're going to spend more money on cooling. It's just during different times of the year. So it's not acceptable to say that, well, August was higher than July or September was higher than, again, you have to compare year over year numbers, and you're down year over year. I'm having a hard time grasping the concept here. It's not in a problem because it's still down year over year. Now, it's not down much, so it's not really helpful, but it's not hurting you at this point. Because again, if it's down and the CPI numbers are up, that means that something else is making the problem. And we already know what that problem is. It's Shelter.
Because in the prior month, energy prices fell by 3.6% year over year. But from August to September, energy prices actually went up. So month over month, it's up 1.5%. So for the past few months, lower energy prices have been helping to lower the overall inflation figures.
And folks, you've seen my reports, you've seen my other videos, and if you haven't, go back and look at them. I spelled all this out to you, showed you exactly where it was going to change, because it's not that complicated. All you have to do is look at the next 6 months on the numbers. An example, we know how much we spent in January through September now in gas prices. And when you're comparing year over year, all you have to do is look at what you're currently doing in comparison to see what they're going to be. We knew that going from January through July, it was going to be a huge deduction because in June of last year, we were $5 a gallon. This year, we were at 3 something. That's a massive deduction. The question is, what else was going to continue? Was it going to allow other things to come down? So again, I don't understand his confusion with this.
But moving forward, energy prices are expected to contribute to higher inflation.
Again, when you say contribute, let's get specific. Currently, it's down year over year. That's not contributing to squat. Even if it's up 1%, if the total CPI is wanting to be 3, as long as it's under 2 or 3%, it's not contributing to anything.
So the tables have turned. Now, moving on to food prices, please bear with me because I know this is going to...
Yeah, and I don't want to get into the rigmarole on food prices. And yes, we can sit down and debate these numbers all day long. It doesn't matter what you think. It doesn't matter what is being paid at the grocery store in your area versus another area. And I don't mean this in a negative way. Please understand, I know it affects you and it affects me personally. But as far as the stock market and whether Powell's going to do, it's not relevant. He has to go off of these numbers. He has to go off of what he sees as his reality. And his reality are these numbers here. And these numbers are what they are. And it really doesn't matter. When 40% is up 7.3, you're not getting down to 2. It's all about shelter at this point. It's all about making sure that oil doesn't bleed into these other stuff. And we haven't seen that yet. I'm still here to say, and I'm willing to bet on this. You know, again, I'm not a huge betting fan other than I am in the stock market every day. Clearly, when oil was at $130 a barrel and you had all of your companies come out and reprice at that price, they never came back down when it was at 65. They might have made a small adjustment. They didn't make a big adjustment on this. What you're saying here is they've already baked in the higher gas prices in most of the stuff. So you're not going to see a big problem in this area. Oil is not going to be, again, barring it going up over 130 or 140, where it currently is at in the 80s is not going to be a huge hindrance on the CPI. The question is it going to get baked into the other stuff? And again, I don't think they're going to rebake in on any of these things. I think it's already baked into the prices because they did go up so much. When you look at your cereal, when you look at all the things you buy from your local grocery store, they didn't come down when gas prices came down. We all know that. We all went to the grocery store. We saw that, which is what I've been saying all along. It's not going to be deflationary. Having gas prices down, they're not going to take it out of their numbers. The nice thing is they shouldn't have to rebrand and reprice it back up. And we haven't seen that yet. If it happens, we'll look at it. Because like you say, I keep looking at these numbers and we'll have a video out here in a couple of weeks where we talk about how oil and all of the, soybeans and wheat. And I've got my little chart. We'll come up here and take a look at those. But they're not up yet either. So if the things that make up inflation aren't continuing to go up, it's not going to continue to go up. We just have to continue to wait and be patient for real estate to roll over. Just like the other 2 videos we're talking about, they've got it right. Powell's not stupid, and none of these guys are. They're going to wait for this. They're going to let it pass through. They know they don't have to go anymore. Everything else is coming down. And yes, it's coming down slowly. And if you want to call it sticky, that's fine. It really isn't sticky. What it is just waiting for the real estate to catch up to the rest of the market. So again, talk to your financial advisor. Make sure you're in the right position for your long-term financial goals. Dickie out.